Good morning, dear students. How are you all? I hope you all are fine. As you know, in first video we have discussed about the introduction of a partnership, like meaning and definition of partnership, features and partnership deed, etc. In this video, we will discuss about the practical concept based on the partnership accounting. The topic name is the distribution of a profit and loss. Before going to this topic, we needed to discuss about the financial statement or final account of a different type of organization. As you are seeing on the screen, in sole proprietorship business, there are three accounts prepared for final account: trading account to find out gross profit and gross loss, profit and loss account to find out net profit and net loss, and balance sheet to know the fair picture of the organization. In the partnership business organization, first account is prepared for trading account to find out the gross profit and gross loss. Second account is prepared to profit and loss account to find out net profit and net loss of the organization. Third addition account is prepared in condition of partnership. That account is the profit and loss appropriation account, and the next balance sheet. In company's account, we will discuss whenever we study about the company's accounts. Is it clear? So now we will discuss about the partnership accounting. The point is distribution of profits among the partners. As you are seeing in the screen, transactions of the partnership firm are recorded according to the principle of double entry bookkeeping system. As you know, all the accounting are mentioned as per the double entry bookkeeping system. As a sole proprietorship concern, a partnership firm will also prepare trading account, profit and loss account, and balance sheet at the end of every year. As you know, the only difference between accounting of a sole trader and partnership firm is that the profits of the partnership firm are divided amongst the partners. Listen, important point. After preparing profit and loss account, after preparing profit and loss account, profit and loss appropriation account is prepared to show the distribution of profits and losses among the partners as per the provision of partnership deed, or as per the provision of Indian Partnership Act 1932 in the absence of partnership deed. It is an extension of profit and loss account, and the nature of this account is nominal account. It records entries for the interest on capital, interest on drawings, salary, commission, creation of reserve, and division of profit among the partners. So I hope you understand the concept. Profit and loss appropriation account is prepared after profit and loss account to distribute the profits among the partners and appropriation of the profit. Is it clear? How this account is prepared, we will discuss here. The format you are seeing on the screen, that is the format for profit and loss appropriation account. First, we will write net profit or net loss given as per in the question. If net profit is given in the question, we will write in the credit side of this account. If net loss is given in the question, we will write in the debit side of a profit and loss appropriation account. Is it clear? The point to be noted here, these are 3 points: manager's commission, interest on partner's loan, and rent paid to the partner. These are 3 important points. Manager's commission, interest on partner's loan, and rent paid to the partner is given in the question, it will be deducted from net profit, because these are charged against profit, not the appropriation of a profit. Manager's commission, interest on partner's loan, rent paid to a partner, these are the expenses of the firm. That's why these are charged against the profit of the firm. That's why it will be deducted from the net profit. After deducting net profit, the amount will be so here. Is it clear? Second point, interest on drawing. As we have discussed in last video, how to calculate interest on drawings in different situations. Interest on drawing is the income of the firm. Interest on drawing is the income of the firm. That's why it will be recorded in the credit side of a profit and loss appropriation account. Is it clear? In the debit side, interest on capital. Interest on capital is the expenses of the firm. That's why it will be recorded in the debit side of profit and loss appropriation account. How to calculate interest on capital in different situation, we have discussed in last video already. Is it clear? If any partner is allowed for any salary, commission, remuneration or bonus, it is an expenses for the firm. That's why it will be recorded in the debit side of profit and loss appropriation account. Point to be noted here, to reserve. Reserve is the appropriation of profit, how much amount to be kept in the firm. How much amount to be kept in the firm, this amount will be kept in the firm. For this purpose, the reserve are created out of a net profit. It depends on net profit, 5% or 10% or 15% of a net profit. Is it clear? And the last profit, if credit side is greater than debit side, the difference will be divisible profit. It will be distributed among the partners capital account or current account. If fluctuating capital are using, this amount will be transferred in partners capital account, or if fixed capital method are using, in such situation divisible profit will be transferred to the current account. Is it clear? Or if debit side is greater than the credit side, the difference which will be divisible loss, it will be transferred to the partner's capital account or current account as per the methods required for maintaining partner's capital account. I hope you have understood this practical concept practically. Now note important point here. Important point are, the point number first, the net profit is recorded in profit and loss appropriation account after adjusted manager's commission, interest on partner's loan and rent paid to partners. I told you before, these three items, manager's commission, interest on partner's loan and rent paid to the partner, are charged against profit, not to be treated as appropriation of a profit. That's why these three items will be deducted first from net profit. Is it clear? Second point, divisible profit is transferred to partner's capital account in case of fluctuating capital method. The divisible profit will be transferred to the partner's capital if partner's capital account are maintained as per fluctuating capital method. And point number third, divisible profit is transferred to partner's current account in case of fixed capital method are used. I hope you understood how to prepare profit and loss appropriation account. Now here we will discuss some important topic with practical. How to calculate manager's commission, how to find out rent paid to the partner, how to find out interest on partner's loan and etc. Here the point is manager's commission. Sometimes the manager is to be allowed for a certain percentage of net profit, certain percentage of a net profit as his commission. Manager's commission is calculated as follows. There are two conditions for calculating in manager's commission on net profit. The condition first, on profit before charging such commission. It means in the profit part manager's commission is not charged. It means before charging such commissions, before charging manager's commission, your formula will be used for calculating interest on manager's commission on net profit. Manager commission is equal to net profit, whatever given in the question, into rate of commission like 10%, 5%, 8%, 9% divided upon 100. Your amount will be manager commission. The second condition, on profit after charging such commission. It means commission will be provided after charging manager's commission on net profit. Here manager commission is equal to net profit into rate of commission upon 100 plus rate. 100 plus rate means in net profit 100% is the profit amount plus whatever rate of commission, both are included in net profit. That's why 100 plus rate will be used here to find out the manager's commission. I hope you understood. Let me discuss how to calculate practically this concept. Here one example you have given in the question. A, B and C are partners in a firm. The net profit of the firm during the year ended 31st March 2020, that is the closing date of a session, is rupees 1 lakh. Rohan, who is the manager in the firm, is entitled to get commission at the rate of 5% on net profit before charging such commission. Here point is given, before charging such commission calculate manager's commission. So your answer will be solution. Rohan's commission is equal to formula net profit into rate of commission upon 100. The net profit given in the question rupees 1 lakh, the rate of commission 5% divided by 100, your answer will be 5000. 5000 will be commission of a manager Rohan. Is it clear? The second example here, Sita, Geeta and Nita are partners in a firm. The net profit of the firm during the year ended 31st March 2020, that is the closing date of session, is rupees 2,20,000. Ankita, who is the partner in the firm, is entitled to get commission at the rate of 10% on net profit after charging such commission. Calculate manager's commission. The point is given here, after charging such commission. To be noted, after charging such commission means after charging of a manager commission. Your answer will be Ankita's commission is equal to net profit into rate of commission upon 100 plus rate of a commission as per formula. So here net profit is given in the question rupees 2,20,000. The rate of commission is 10% upon 110. 100 plus 10, 110. Your answer will be rupees 20,000. Is it clear how to calculate manager's commission in both the situation, after charging or before charging? I hope you understood the concept properly. The most important point to be noted here, note, if manager is a partner, if manager is a partner, manager's commission will be recorded in the debit side of profit and loss appropriation account. And if the manager is third person out other than partners, manager's commission will be recorded in the debit side of profit and loss account. I hope you understand this concept properly. If any kind of query you are getting, you can ask me. Is it clear? Now we will discuss about the next concept. The next concept is the interest on partner's loan. How to treat while preparing profit and loss appropriation interest on partner's loan. So here, if a partner has given loan to the firm, if a partner has given loan to the firm, he is entitled to receive interest on such loan at an agreed rate whatever in partnership deed. It will also be provided in the absence of partnership deed at the rate of 6% per annum. I told you this rule. If any partner gives loan to the firm in condition of absence of partner's deed, the 6% per annum interest on loan will be provided to the particular partner. The point to be noted here, it is charged against profit. Interest on partner's loan is charged against profits. That's why it is recorded in the debit side of profit and loss account, not in profit and loss appropriation account. It is provided irrespective of profits or losses, whether firm has losses or whether firm has profits. In both the condition, interest on partners loan to be provided. Is it clear? The entries for interest on partners loan. The first entry for interest due on partners loan. Entry will be interest on partners loan. This is an expenses, that's why it will be debited. Interest on partners loan account debit to partners loan account. Here we have debited interest on partners loan account because it is an expenses of firm, and expenses always debited, and credited to partners loan account. Partners loan account is a liability, and liability always credited. Is it clear? So your entry for due interest on partners loan, interest on partners loan account debit to partners capital account, and the second entry will be for transferring the interest on partners loan to profit and loss account. So your entry will be profit and loss account debit to interest on partners loan account. Is it clear? I hope you understood this concept properly. How to interest on partners loan to be treated while preparing profit and loss appropriation account. The next third point is rent paid to the partner. Point to be noted here, rent paid to the partner will be treated as an expenses, as we have discussed before, of the firm, and it is also charged against profits, not an appropriation of a profits, because it is not the duty of partner to provide premises for the business. That's why it will be recorded in the debit side of profit and loss account, or deducted from profit from net profit in profit and loss appropriation account, as I told you. So point to be noted here, 3 points: interest on partner's loan or rent paid to the partner, that will be deducted from net profit while preparing profit and loss appropriation account. And the second important point, third point, in manager's commission. Manager's commission will be treated in two ways. If a manager is a third person, it will be deducted from net profit, or if a manager is a partner, in such situation it will be recorded in the debit side of profit and loss appropriation account. I hope you understood the concept properly. Good. Thank you.